What's up guys, it's the Cheapster here, back with another video, and today we have another Side Hustle Millionaire portfolio update for you guys to see where the portfolio currently is in these crazy times, because the markets are wild out there. I definitely picked like the craziest time to start doing something like this, but let's go ahead and get into it and see kind of where we are. Well, first off, let's say we can celebrate that our current value is now above $1,000. It took a long time to do that because we were working against the market. Every time we'd put money in, it would drop because we worked against the market, and then we'd not be at 1,000. But you know, just as I celebrate this, it could go back down, and then we're going to be below $1,000 again. But I don't know, we're $200 above it now, 1,180. Feeling pretty good about that. We've put in 1,485, so we have a total loss of negative 20% on the account, which is not very good. We've had some issues, which there is a lot of stuff to talk about in this, because there's been some crazy stuff since I did this update last time. Ever since then, it's gotten like wild with some of the stuff that's happened. All right, so starting off with the first stock, we have DoorDash. It is down negative 47%, so not doing very good. Not surprised about that one though, because it was one of the stocks that we added pretty early on before the market really started crashing, and that is the type of stock that really gets hit in this kind of market right now. So it actually is up quite a bit, because the last update I did, I think, was this October 13th date that I looked at the values of them. So it's actually up. It was 45 then, now it's 53, so it's actually up from there. I don't put much into that because I think we really have just been on a bear market rally for a little bit here. Of course, you never know what's going to happen, but I'm not getting too excited over seeing anything going up right now, because I think we still have a lot more down to go. But more down means more time to get invested at really low prices. So, you know, I'm not too upset about that right now, because this is a long-term hold stuff for me, so whatever, that's fine. Moving on to number 2. Since the last time I talked to you guys, I own Twitter. Now, I don't own Twitter, because if you don't know, Elon Musk actually took Twitter and made it private. So it got taken off being public, and that meant that he had to pay out all of the shareholders at the price that he bought the company at. It's a little complicated, so I ended up getting paid out for it. And what I ended up just doing, since that video was about putting the money into Elon Musk companies, Twitter and Tesla, what I ended up doing was just taking the proceeds. So you can see I put Twitter went private and forced a sale for a gain, so I bought Tesla with the proceeds. So everything that I got paid for Twitter, I just put it into Tesla, and now this will be a Twitter Tesla conversion that I'll track, because this is just Tesla now. It's a little complicated, I know, and I didn't realize that this stuff was going to get crazy like this just with doing this portfolio. But I've had a lot of weird things happen with some of the stocks I've owned, but that from now on is just pretty much going to be tracking Tesla. So it's like I added more money to my Tesla holdings. And what that meant is that is actually not doing so bad. It's down negative 1%, but that's because Twitter, actually, I got paid more than what I paid. So I actually got a gain on that Twitter stock that was paid back to me for the proceeds of that going private. And then I actually got to put all that in Tesla, kept my cost basis at what I bought Twitter for. So it's actually not doing too bad, because I got to make money off of Twitter, but we still are down negative 1% because Tesla did take a pretty hard hit. Which also Tesla's confusing, because Tesla was a 3-for-1 stock split, so there's a lot of complications with that, but you can just pay attention to the gain and loss, which is negative 1% with that. And then moving on from that, we have the Tesla that I actually did buy at that point, which is down negative 47%. Tesla has not been doing well right now. It's really been getting hit, so that's doing just about as bad as my DoorDash, so not doing well there. Moving on from that, we got Home Depot, which is actually up 6.37%, which is hilarious, because if you watch that video, it was actually me, and I just went to my wife and said, what company do you want to invest in? I just had her tell me a company, and I would just go out and work it, and she said Home Depot, and we got invested in it, and that company is actually one of my companies that is up right now. And I don't expect that to necessarily stay like that, because I think next year the housing market's going to be kind of dicey, and that will probably affect Home Depot too. But as of now, that is up. Then moving on from that, we have Grubhub, which this cracks me up, because I had such a bad day working Grubhub, and I kind of just thought I was throwing this money into the garbage when I invested in Grubhub, because I don't know, I didn't really believe in it. I was just kind of doing it for the meme of doing the video working Grubhub to invest in Grubhub, and that has ended up being our best performing asset on the portfolio. It is up 17.33%. And I assume some of that is probably just good timing, maybe getting it in there at like a decent time. But either way, it's up 17.33%, which is pretty awesome. Nice to see that up. Again, all these things, I'm like, I don't know if I really expect to see that stay up, but I don't know. For now, I'm going to take it. Then we have AMC, which is down negative 37%. So that roller coaster has been riding. I knew when I bought that it was going to be a roller coaster ride, and it was going to be interesting for the portfolio because it has been up a lot, it's been down a lot, and also Ape has been a split off of it. I talked about that last time, that they actually gave out free shares of Ape, a new stock that's the AMC Entertainment preferred stock, which I'm like, I don't prefer that. I prefer to have the AMC that's actually tied to the company. But it's kind of something that if I had just owned this outside of the portfolio, I would have sold that. I would not have kept that, and wish I had, because it is really down. It's down 80%. It is now down to 95 cents, and the amount that I got it at was $4.76. So being down to 95 cents, really bad. That is really hurting at negative 80%, and is my worst performing of all of the stocks I have on here. But of course, there's an asterisk with that, because it's not like I actually bought that Ape. I didn't actually pay for that, but I can't put my cost basis at 0, or else I can't actually value what the percentage gain or loss is. So I just put in what the amount was that they actually gave me. But technically anything I own in this is actually just free money. So the current value is $5.70, which is terrible, but I mean, that's $5.70 of just free money because they gave this to me without me having to pay for anything, just because I owned AMC. So technically it's all a gain still at this point. It's not actually negative 80, but from what they gave me, it is down negative 80%. And then moving on from that, we have NewScale SMR, a company that I'm really excited about for the future of. That was something I was really excited to get invested in. It is down negative 26%. It kind of, I got that at kind of a pump time, which was unfortunate because I'd been watching that stock for a while, and then when I went in to buy it, it had gotten some attention and kind of pumped up the price and stuff. I'm not too worried about that difference long term though, because I think long term this is a very interesting company to be invested in, because the technology they have and what they could do for the future of nuclear power and stuff. I'm still very excited about that one. And then moving on to Fubo. Fubo was kind of unexpected. That is down negative 30%, and I bought that pretty late into this game of the market being down. You can see my first time that I actually put it on the chart here is October 13th, 2022. So that was almost like the bottom of the market too, and it is down another 30%. So I'm pretty shocked about that one. I think it's just one of those companies that possibly also got kind of a pump around that time, and it was just not a good buy-in time. It is still a company I buy into though. It's still a company I really think has some potential in the future, has a lot of potential in the future. It's a big name that I just keep hearing about. I think they are here to stay around, but it's going to be a difficult time for them right now. This is a difficult operating time for unprofitable stocks. So they are one of those unprofitable stocks right now, growth stock, that is just probably not going to do well right now, but it's something I'm going to hold. And again, that's a lot of this portfolio. A lot of doing this is about buying these stocks and holding on to them, not getting shaken out by the emotions of what's going on and stuff, but holding on to it and seeing where these things go. That's one of the reasons I kept Ape, because I was like, you know, it's going to be a wild ride for that. Maybe there's going to be a day where Ape shoots back up because of, you know, meme stock investing and whatever. But that's kind of the point. Keep the portfolio interesting, and because I think long-term investing is a lot better than letting your emotions take a hold of you and start to just trade out of things. Because you can buy into a company, and if you think that's a good company, then you should still hold on to it. And if nothing's really changed that makes you think it's a bad company other than the price going down, I don't think you should sell, because it's like, well, you bought into it in the first place. And that's kind of the benefit for being a long-term investor. But of course, like I always say, not financial advice. Do your own research. This is all at your own risk and stuff. Any kind of investing is always at your own risk. This is just my opinions, and a lot of my portfolio is not even like my investment strategy. It's just some of it's for the meme, some of it's for the fun, and just making the portfolio interesting. But moving on from that into a stock or a mutual fund that is not for the fun or the meme is Fibgrix, because that is one of the safe ones I bought into. A growth fund that I really like. I think it's a good growth fund. They tend to perform pretty well. well. And what do you see? It's up 1%. So I have a 1% gain on that, moving like a growth fund or like a mutual fund should, just kind of, you know, tracking, keeping along, nothing crazy, nothing crazy lost, nothing crazy gained. And again, that's one that we kind of are in a bear market rally right now. So it's kind of up from that. It's been down for a while. I think actually it would technically be down today, but this doesn't change its price until like 8 p.m. or something. So I think actually if it changed its price, it would be negative right now. But still, just kind of staying around a baseline for that one, because that one's probably the least risky of all these, I guess, which, you know, there's still risk in everything. But moving on, talking about risk, Bitcoin, we've got Bitcoin down almost 60%. That one really got bought at a bad time because I bought that real early on in the portfolio, and that is down 60% now because the purchase price of that for me was $42,000 is the range that I bought that in, and now Bitcoin is down to about 17,000, and it was even lower. It just kind of pumped up a little bit. So Bitcoin is going through the crypto winter, that is for sure. So that is really hurting. Would be the worst thing in my portfolio if it weren't for Ape, but of course, like I said, Ape is just, it's all gain because it was given to me. So technically Bitcoin is the worst performing thing in my portfolio right now. Then moving on from that, we got Miso Robotics, so into the private equity stuff. Miso, of course, they just did their Series E Plus round of funding, and that was priced a little higher than what I ended up paying. So that's the only way you can get value from the private equity, to understand where the value is what they're actually asking for in funding. So technically that says we're still up 10%, but nothing's changed from that. It's just because of that funding round being charged a little bit higher per share, which isn't even necessarily true because it's not being fluctuated because it's not publicly traded right now. So I don't give that much attention to what that actually says there. And then we've also got Ice Giant, which is the newest add to the portfolio, company that I'm pretty excited about, and they are down negative 3.38%, and that's just because there is a fee on buying into them, so we have to outweigh the fee, and nothing's changed on the price yet. Because they're still doing the same thing. Private equity is just a funding round, so you only know what the price is of that funding round to be able to value where the share prices are on that. So we're down negative 3.38% because that's where we were right from the beginning of buying it, because you have to pay a fee to be able to buy it anyway. And in total with all this, we have invested $1,485, and we currently have a value of $1,180, a negative 20% loss, which is not looking good, but hey, it's looking better than some of the losses we've had before. Back in September, we were having a loss of 23.35%, so getting a little bit better. And of course with this, as we invest more at the prices that are going down while the market is dropping and stuff, that means that we have more upside potential as long as the companies stay around and we don't lose any companies, which is definitely a possibility. You know, as we're possibly going into a recession, I'm thinking it looks like we're going into a recession. Bankruptcies are not out of the question, and when you're a long-term holder of stocks and stuff, it's something that could affect your portfolio. So I wouldn't be crazy shocked if we see some kind of bankruptcies come up next year. But you know, that's the thing where you got to weather it through as a long-term investor, buy stuff, hold on to it, and you know, you might lose some, but then the ones that you hold on to that actually do well and come out of it could have huge gains, and that's where things could really pile up. And that's just kind of what I'm thinking right now. It's been kind of a rough time to watch this, but honestly, like I would say, I've just become pretty numb to all this as I've been investing so strongly in a bear market or a possible recession, or maybe we're already in a recession. So I've really kind of become numb to it, which is, to me, I think a good place to be, because you can just continue to keep investing. Of course, this portfolio is not all of my stocks. This is not all my holdings. This is not even close to most of the holdings I have, because this is not where I put most of my money. It's just for the Side Hustle Millionaire portfolio. But I do think it is kind of good to kind of just get numb to that and then just keep investing into the markets and stuff. And I think eventually you'll get the reward of that, but it takes some time, and you got to go through some pain, and you got to ride out these emotional roller coasters of seeing your stocks go up and down and stuff. And especially if you're dealing with like pretty big amounts that you're investing, that can get pretty tough. So it's going to be a tough time, I think, in 2023, watching stocks go up and down even more and kind of get crazy. So that's where I am, and I'm just going to keep investing. I'm going to keep doing these videos and keep growing the portfolio and just kind of seeing where things go. You know, some of this is a little bit of an experiment with me, and some of these, like I said, are not even stocks that I'm like so big on, or I kind of just did them for the meme to be able to have a good video and stuff. But I think investing is kind of what's important, like finding companies and investing. But that is it, guys. That is where the Side Hustle Millionaire portfolio is. Now that we are at $1,000, we are, what is that? 1,000% away from being a millionaire in the Side Hustle Millionaire portfolio. So I just need 1,000 more times this and we'll be there. But thank you guys so much for watching, and thank you guys for keeping up with the videos. And if you guys like the video, remember to do the cheapest thing you can today. Tap that like button. Also subscribe to the channel to keep up with more of this. And I will see you guys in the next video. And remember, stay cheap.
Hey, you better be saving that money. Don't you be spending it now. You're still here watching this? You might as well just subscribe. Why would you not at this point?